So this is how to trade boom and crash. You want to catch spikes. I said in my previous video that I prefer to trade, I prefer to buy spikes on the trend when it is actually buying. First of all, with the combination of the two moving averages I use, okay, I just want to show you. And the video I did when I took this trade actually got corrupted. I don't know what happened, so I couldn't upload it. It was bad. Okay, so right now, as it is right now, you already know my settings if you've been following me for a while now. So this is it. Let me go straight to the settings. Okay, this is on the main window, the 10 moving average. Please be fast. Just take note of it. I won't dwell on it. I want this video to be very short. This is the 200. So I said I used the 200 and the 10 and the 22, but right now the 20 is not on the chart, and I decided to use two moving averages right now. Then let's go to the indicator window. We have the 14, the relative trade index period 14, and the rest. Please just note of all of these levels here, all of this here, so that we will not dwell on it. And then for the MACD, it's either you use 13 or you use 12. Okay, it's either you use 13 or use 12. So like I said, we're not going to stay much longer on this. This is where I mean, either I change that to 13 or 12, whatever it is, it's not far from what I'm going to say. So I've always been using 13. On this video I'm using 12, but it's the same thing. Okay, so now let's go straight to why I took. Now the reason why I'm doing this video, I want to show you how you can actually safely buy spikes. Like now you see it was moving, and then you saw a little spike on 1 minute here that just went up. Okay, this is it. Okay, right now I'm supposed to exceed this trade, but it's still on an uptrend, but I can exceed it. Let me check 15 minutes, what 15 minutes is doing. Don't forget, I don't trade without looking at the trend. Now look at on 15 minutes, there was a buy here. What's the buy? I said the smaller moving average and the bigger moving. The bigger moving average is 200, which is the blue moving average here. And then the smaller moving average, small period, the slow period moving average is the 10, which follows the price. Okay, back to back. So, and I said pay attention to the MACD. Pay attention to the MACD. Okay, MACD here, we have price crossed for a buy. All of this, a buy. Now what are you supposed to do? Price also is on top of this 200. Price also on top of 200. And now we are looking for buys. Just buy. Now the price came down, and then spiked upward on top of our moving average. This was the spike. That was why I took this trade on a buy. And you see where I kept my stop loss. So if we go back to the smaller time frame, 5 minutes, you'll see that price also is on top of 200, as that when I took this trade. And then you see that price was also here where we have the MACD. You can also see that price had crossed here for a buy, and this signal came right where the cross had taken place. The signal crossed above while all of this was heading upward. Okay, you can see all of that. So please pay attention to this chart. Now this is where I entered this trade because I saw the movement up. I took this trade, but I used the 1 minute to enter. So whichever time you entered, okay, when I saw this, already looking at price action, where the price was, I already checked 15 minutes. I knew what price was going to do. I had to take this trade. Let me show you 1 hour. On 1 hour, if you see this, price had closed above this moving average. Yes, on 1 hour, this is not, like I said, you have to focus on the trend, on the time frame you're trading, then check what the bigger time frame is doing. So the bigger time frame is still under 200, which is supposed to be selling. But you have seen that all of this sell had already taken place on the 21st of September down to 22nd. Okay, if you're looking at this very well, this sale had taken place here. And looking at the structure of these markets, okay, it looks like a market that is going to pull back up. Look at the market, the V. This is clear price action, and this is a V. And then there is a divergence. There are a lot of things to look out for here. Okay, you can see this diversion here. You can see that price was doing a lower low and a lower low and a lower high, which is the trademark for a sell trade, while the MACD was doing a higher high and a higher low. This is it. Sorry guys, this is it. This price was doing this, while the other price was going up while this was coming down, and so it began to go up as well. Now there's no way I'll be selling this because of the way I'm seeing the market move. There's no way I'm going to be selling this. So if you are to use this line, you will see that market is trending upward. This is price action. Okay, I'm not just trading without indicators. I love to trade with indicators, okay, but I don't overlook the price action here. This is a structure telling you that this market is likely going to pull back up, okay, which it did. Now let's go back to 15 minutes. 15 minutes also was doing an upward movement too, as you can see, and price sat on 200. 5 minutes too, doing an upward movement as well. Okay, doing an upward movement as well. And then I see this market close above 200. I just knew that the market was going to buy. Then the next confirmation is that our MACD also crossed at this point. Our MACD also crossed at this point too, for that sale, for the buy, sorry. And I was talking about how to actually buy spikes, like you're safe buying this spike, and then so that you'll be able to place stop loss. See where I place my stop loss, guys. Okay, see my entry and see my stop loss. This was my entry. As you can see, that's my entry. And you can see, where is the stop loss? I was willing to lose just this candle. Just that candle. I was willing to lose just that. This was where my first stop loss was. Then when the market now moved and went up, I adjusted it here. This was the first stop loss. This became the second stop loss. Okay. So if you're seeing this, you can understand now. Another way to do this, to save your profit, if I don't want to come out of this trade now, of course, as you can see, I already have my trade in profit. This is actually, this other account is a little bit bigger, but see the loss I use. I use a save lot size. Okay, so you can open this lot size on $100 account. Actually, you can open this. You can open this lot size on an $80 account. So this is quite very safe for these accounts. I don't trade carelessly, guys. I'm very careful. So you see this, price is still reacting because it's a buy trend, but it might be exhausting right here because of what I'm seeing here. Price might do something here because of what we are seeing in this zone here. What we are seeing here, price might change or continue going up. So for me to reserve this money, this is what I'm going to do. I'm going to take my stop loss up here so I don't lose all of this in case I'm not around to look at it. This is boom and crash, guys. Before you turn your eyes, everything can go. So I'm going to secure this profit here at the previous support, 12524.34. 12524.34. 12524.34. I can leave it at that round number there. Okay, so right now, you see, I have moved my stop loss from where it was. I've moved my stop loss from where it was. From here, I have moved it up to this place. So now this trade is risk-free. Okay. I can take this off, but like I said, for the purpose of education, if you want to take this off at this point, that is $52, that's quite okay. But if you want to come out of this trade, if you want to let the trade run just in case it decides to do this and keeps going up, okay, I've secured my account here. So if this market decides to come down here, it's going to stop me out. This is the proper way, the best way of trading boom and crash with a stop loss, guys. With a stop loss, this is the only way you can trade stop loss. Because why? Boom actually booms upward. I said it before in my previous video that boom booms upward. Okay, boom boom also, and that's a different strategy on its own. But if you must trade, catching the spikes, if you must trade catching these spikes here, then you have to go for look for downtrends. You have to look for, you have to be selling, of which you can be at risk. You can be at risk of these spikes that can come out and take out all the profits you've actually made. Just imagine you started this trade from here and it counted 1, 2, 3, 4, 5. Before you know it, it spiked all and took out all the profit. What if it continues to go up and continues to go up? So that is the risk in this business, guys. There's no business without risk. Okay, so that's why I said, if you want to do this, you're still okay. Just keep it short. Try to pick 1, 2, 3, 4, 5 candles per trade. Depending on the account that you have, you still make a lot of money. But if you want to, if you want to actually catch spikes, instead of doing the conventional way like others do, they'll tell you to go they'll tell you to look at these zones. They'll say, look at these zones. When price gets to this place here, when price gets to 10, place your buy. This is where price got to 10. Guys, see what happened? Yeah, it spiked. Well, that's also good. But most of the time, sometimes it will keep coming down, and before you know it, you might not have the courage to stop this trade out. So that is why I prefer to take a buy on boom so that I can take a stop loss. So that is what I have done here. See, guys, see what I was saying. Now look at the profit. It's 65 now. You know why? Because I know this is an uptrend. I don't have a business selling here. All I have to be doing is buying. Okay, I have to be buying, looking for opportunities to buy. And so whether I'm looking at this or not, my account is safe. If this price decides to come against me, it's going to only stop me out. It will just stop me out where I have marked. This is where to stop me out, as I have marked. Nothing more, nothing less. That's where it's going to stop me out. So if I don't want that to happen, if I want to keep securing these profits, okay, I can just bolden this up. I can go to 1 minute time frame now. Okay, there are other support zones here. This is a long one. And let me check where market actually is. Okay, this market is still buying. But it has gotten to this point. So I'm going to exceed this. It has gotten to this point. That is H1 previous resistance zone. Let me make this bold. So let's go to 5 minutes. See where price is. I can decide to come up any moment from now. Like I said, if you look at this zone here, looking at the MD here, you see what is happening here. Anything can happen from here. So I can come out of this trade, or it can always break out of this place, out of the shaded portion. I don't know if you understand, but I believe this is easy enough. It can break out of here, retest, and continue to go up. Okay, or it can decide to come down and keep coming down, and I'll lose, and but I'll be stopped out here. That's why you need to trail your stop and preserve your income when you are actually buying boom. That's when you can do this, but you cannot do it when you are selling boom. You cannot, except maybe you were selling boom and it has sold for a very long time. You can now secure your account knowing that if it spikes and gets to where it spikes you out, it will just take you out where the spike stops. Okay, but that is it. That's what I intended to show you. So right now, I'm going to take this trade off because I have a valid reason to take this trade off. The valid reason is that price has gotten to a region where I am no longer sure what will happen there. Okay, price will begin to come down, and I can lose. Price can begin to come down from here. So this is a good reason to actually leave this trade, guys. So I hope this is helpful. Okay, I will still do another trade again, showing you how to pick trades, how to actually buy boom on a buy trend when it is actually buying. So you don't have to bug yourself with waiting to catch trade when MACD is at oversold region and all of that, or start selling it up. These things are tricky, show. Look at when this one said oversold. Okay, let me show you this. When this price said oversold, what did you see here, guys? This is where oversold came up. You would have freaked out when all of this happened. Okay, you would have freaked out. But when it is buying and you are actually buying, you can preserve your loss and take your entry on this trade the same way I did mine. Okay, so that is it for now, guys. I don't want to keep this recording to be too long. Okay, I just want to show you that it is safer to actually buy boom when it is trending upward. You know that you're going to be catching more of the spikes. Look at price is trending above 200 moving average. Okay, and that is the reason why price is spiking upward. And so when price is below the moving average, you see that price was coming downwards here. Price came downward. Why? Because price was below. Sometimes price can cut across each. Now price was coming down because it was below. It cut across here. Sometimes in a range market, you see price doing this, breaking trades. You see price cut across, come back again, cut across. We don't want to be in such market anyway. But sometimes you can find yourself there. But whenever you see market has clearly come out of, has clearly gone under 200 moving average, you're just looking for the sell. But then, like I said, if you want to be safer, if you want to trade with stop loss, please train your eyes to actually catch moves like this when the market is actually on an uptrend. So this is why I entered this trade. Okay, this was why I entered the trade, because price had broken here and retested. So this is why I took the trade. Finally, before I go off, price broke out of here, retested, guys. Look at the zone, it retested. This was supposed to be the entry. So before I clicked the buy or the sell, the spike took me, and it continued going upward and upward. You can imagine, see now I'm catching spikes, isn't it? I'm actually catching spikes, but on an uptrend. So that makes it safer for me. Okay, that makes it safer, and I've caught enough, and I think it will be justifiable for me to live here right now with this profit I've made, guys. It's not easy to make this money. Okay, it's not easy to make money. If anybody tells you it's easy, the person is lying. It's not easy to make money. It's easy to make money, but it's not easy to make money. That is if you can relate, if you understand what I'm saying. So it's better to stay safe. Okay, so this account is having a stop loss here, and like I said, I'm going to actually come out of this trade and reserve this money for the next trade. Okay, so